All right, good morning, good evening, good night. Welcome into the Nifty Q Show. We're interviewing founders, leaders, and builders in the non-fungible token industry and Web3 space. Today, I'm sitting with John Wu, head of growth at Aztec Network. We'll be discussing how John went from capital S suit to building on the fringes of DeFi, a primer on the Celsius 3AC lending situation, how privacy can be achieved in Web3, and much more. That's a long list of conversations. Hopefully, we can make it to all of them. John, how are you doing today, my man?
I'm doing great, man. Thanks for having me.
I appreciate you stopping by here today. Listen, we're going to touch on, like I said, a lot of stuff. You have this awesome background in DeFi, but this is the Nifty Q Show. We love talking about NFTs. How involved on the day to day are you in the NFT space, working, knowing that you work at Aztec, but also that you love NFTs?
I mean, I definitely track NFTs. I've purchased a bunch. I've flipped a few. I've probably net lost money on the art, but I am in it for the art. I definitely, in general, only buy NFTs that really speak to me. So I am aware, I'm involved, just probably not a pro. It kind of takes a third step behind infrastructure and DeFi, which are two things that I probably spend a lot more time on.
Absolutely, man. And I want to get to all this. You had a viral thread, which is kind of how I got in the mindset that I would love to have you on. You had a viral thread go on with Celsius lending, the Three Arrows Capital situation. Any update you think that you could give to the people out there before we get into your background and all the rest of the conversation with the Celsius lending?
Yeah, the update is probably not about Celsius, but about all these other lending platforms that are struggling now, right? BlockFi got bailed out, Voyager got bailed out, both by FTX and Sam from Alameda. So I think we're just seeing that the systemic contagion caused by 3AC is it's happening everywhere. Now, I think there's a big question of why did Celsius and Babel pause withdrawals, but BlockFi and Voyager never had to, even though it seems like they're incurring a lot of bad debt. And, I think this is pure speculation here, but if you look at the companies that FTX decided to bail out, they clearly must have had a look at all these deals, right? You're making a deal to get bailed out, taking a big line of credit from Sam, and he's probably getting some warrants or owning a piece of your business after that because he's helping you out when no one else wants to. Very Warren Buffett like move. And my suspicion here, and this is pure conjecture, is that Voyager and BlockFi were probably cleanly run, and they just got kind of a little hosed by 3AC, not being able to repay their debts. And my suspicion is that at Celsius and Babel, they were maybe not running it as cleanly in the background.
Mm.
And again, pure conjecture, but it's really easy when you look at these businesses and break them down. They kind of look like banks, and banks use their customer deposits to loan out to other people. But there's lots of stuff you could do with customer deposits, right? You could put it all on black if you wanted to. You could put it in super liquid instruments, and it's clear that Celsius had done some of that stuff. And it's not clear whether BlockFi and Voyager have, because from Voyager's public financials, you can't really tell very much. It's just a couple line items, but that's my suspicion, and I think it's going to be a long time before all of this stuff gets settled. But definitely not a great situation if you're a centralized, DeFi bank or whatever these guys are calling themselves these days.
Yeah, I'd love to get a TLDR on the situation for those people who have been hearing the term Celsius, Three Arrows Capital, all this stuff, and then how it relates maybe and bleeds into what we're doing in the NFT space and the broader crypto stuff where we're not, all of us are, essentially playing in the casino a little bit, but we're not getting to the situation where we're putting people's at risk like these people were essentially. So I would love to get your take on how that kind of bleeds into the NFT space.
Yeah, so I mean, these guys are all centralized services. They're really just fintechs that happen to be built on top of crypto, but they're not crypto companies in any specific way, right? They're not on-chain entities. And some of them call themselves brokers. So Voyager calls itself a broker. But I think the easiest analogy to think of is they're just banks, right? They take people's money and they say, "Hey, give me some funds," and by the way, isn't it such a pain to have to like have a seed phrase and a MetaMask and a ledger and take all these security steps to kind of own your own assets? What a pain. Why don't you just send the assets to us and like we'll hold on to them for you? Just like a bank, right? That's the exact same deal with a bank. Like, isn't it such a pain to have to store all your cash and valuables under a mattress? Why don't you just hand it to us? We'll put it in the safe, and we'll make sure it doesn't go away. And what happened to banks in the early 20th century is they took those customer deposits, they started lending them out. And when you lend customer deposits out, sometimes the people who are borrowing from you also redeposit the funds back into your bank. So then you get those deposits and you lend them out again. And that's what we call this reserve ratio, right? Typically, banks keep less than like 10% of outstanding lending and deposits on hand at any given point because, it's just unlikely that everyone's going to ask for their money at the same time. And so they have this kind of precarious situation where they're always balancing liquidity. Um, and of course, that ended all very, very poorly in the late 19th and early 20th centuries, where we had a series of bank runs, and that led to the development of the FDIC, Federal Deposit Insurance. It led to the development of the Fed, where we're like, okay, the banking sector needs to kind of like have better rules and regulations around it so people aren't like making a run on the bank all the time. So these centralized brokers like Celsius, they took a bunch of customer crypto deposits and they lent them out to the other side to counterparties. And one of those big counterparties was 3AC, who looks like they're just unable to repay like pretty much everyone. It's not quite clear what they did, but it's apparent that they just got irresponsibly long on using these centralized lenders' money. And so now these centralized institutions owe a bunch of people their deposits back, but the loans that they lent out to 3AC and others are bad debt and they can't pay them back. And so they're like, oh God, now we're in a really tough spot. We owe a lot of people money and we can't pay them. We don't have the assets. And so I think for me, the big takeaway here is like, the old adage still stands, like not your keys, not your coins, right? If you don't have autonomy, if you don't have self-sovereignty, if you can't access your funds and your NFTs directly, then you're trusting someone else. And trust works up until the point it doesn't, right? Celsius works up until the point it doesn't. Voyager works up until the point it doesn't. When you give someone your assets, you really don't know what they're doing with it in the background. Now, I think it's important to note that's not true in DeFi. Right? In DeFi, you can just go to the Dune Analytics dashboard. You can read the contracts, and you can actually see with full transparency what's going on. Not to say that like some of those protocols don't fail, but at least you can see transparently. They're not like turning to some guy in Singapore and being like, "Hey, we're gonna lend you $2 billion using our customer deposits." So I think the lesson still holds. Make sure you really own your NFTs.
Yeah, I think the retail investor is wondering if this is all over, right? If this is this, well, there was a lot of doom and gloom in the last 2 weeks here. BlockFi was rumored to be going through some of the same things. So, in your opinion, do we still have more to go? Maybe not in the broader markets, but this micro event of these companies completely like collapsing and it leading to some sort of death spiral. Has that spiral stopped, or do we still have more to go? In your opinion?
Yeah, it's super unclear. I think the spiral really I'm not sure if it's much of a spiral. It's just that these organizations were not able to pay back their retail investors. They're like, hey, trust me with your money. And then they really mismanaged the risk. They really mismanaged user funds, which is not a good look. It's not a good look for them. But I'm not, other than 3AC potentially borrowing from multiple of these entities, it doesn't seem to me like there's a huge amount of systemic contagion, because it wouldn't even make sense for them to liquidate crypto funds right now to repay customers, because many of them are so deep underwater. They're gonna have to go through a multi-year long bankruptcy process or restructuring process to be like, okay, how do we dole out these funds, right? Anyone who was able to withdraw before, Celsius and Babel, for instance, like paused withdrawals, they got, full restitution essentially. Like they got dollar for dollar what they put in, because if you just pull out, you pulled out. Well, what happens to the people who are stuck inside, right? They get zero. And so I think this is going to be a years long restructuring bankruptcy process. It's going to be studied in business schools and law schools about how crypto and the real world like interact in this way. But it seems for now that like the type of forced selling that you saw with like Luna, that seems to maybe be over for the time being. And again, who knows? Maybe there's a whole bunch more hidden leverage in the system, and there's another really big Luna or Celsius who are going to be forced into a bad margin call position. But I don't know. For now, it seems like we're at a good stopping point.
Yeah, you mentioned before we pressed live that you still have more threads coming out here on Celsius. You again broke down really nicely the situation that occurred last week and a couple weeks ago. But what are your takes going forward with Celsius, or what do you have planned for those threads here? These spicy takes you mentioned.
Yeah, I'm just thinking about the fact that these guys were basically unregulated banks, right? Everyone looks at DeFi and is like, look at these unregulated financial institutions. Well, I hate to break it to everyone, but all the DeFi protocols are working. They're just working like clockwork. You know, they're doing orderly liquidations. None of them have bad debt. Makers humming, Aves humming, compounds humming. You know, they just work, right? The robot is managing the risk effectively. Um, these guys, you know, these fintechs, they were unregulated banks, and some of them were even FDIC insured. Right? Voyager had FDIC insured USD deposits. So there is a world potentially that Voyager could have lost the federal government's money, that us as US taxpayers would have had to make up for their mistakes. And so, like, I think we need to talk about the fact that these guys were using the banking model of like super high leverage, you know, rehypothecating a ton of assets, but doing it with literally zero risk management. Like Voyager had 8 debt counterparties, just 8 people borrowing like $6 billion of money or something like that. It's not great, you know. That's not great, and so I definitely want us to think about. I happen to be a DeFi maxi. I happen to be a crypto maxi. All in DeFi works. All in regulated banking works. This in between where you're like kind of a bank, but you kind of are exposed to the DeFi risks, like that's not great.
Yeah, it's interesting because I was listening to a podcast you did recently with those guys from Cartoon Avatars, and they
Yeah.
were like on the other side of the fence with being, you know, involved in crypto. They were still kind of very skeptical, and it
Yeah.
is interesting to find that balance between, you know, let's be a sovereign individual, but let's also not have unregulated entities that mask themselves as being safe for all these people, you know. So
Yes.
that's kind of what we're doing here today, and it's good to have you here on the fringes building that at Aztec. So what is the way forward here? Do we self-regulate ourselves? Does the government, you know, kind of come in, and these are the moments that they can take advantage of to kind of get their stranglehold on the situation?
I mean, some of it is self-policing, right? What's the benefit of DeFi? Like, you get to see the status of everything on chain all the time, right? And so I think as individuals, we need to be like, don't get lazy. Don't be like, I am going to use this intermediary. I'm going to trust my coins with this person. Like, if you're not willing to get the ledger, if you're not willing to write down your seed phrase and carve it into a piece of steel and put it in a safe under your mattress, like, don't do crypto. Like, don't do it. You know, like, don't expose yourself to some dingleberry intermediary who's going to say, yeah, trust me with your money, and then do whatever they want with it. You know, I think just pick one side or the other. The banks are regulated, and what regulation is just forced disclosure. The regulators go to banks and they're like, tell me everything about your reserves, tell me everything about where the money's going, tell me about your liquidity position, and they have to report that stuff like regularly, and that works. And DeFi is fully transparent, it's auditable by our whole community, and it's been battle tested, and that works. And so, like, as a community, we need to not get lazy and like pick this middle ground. Like, and I wouldn't be surprised if there's going to be regulation coming down for the whole industry, but definitely for these like gray area middle ground pseudo banks. Like, you know, they just probably shouldn't exist.
One of the best quotes from that podcast interview, and you did a great job of throwing up your dukes here and defending yourself from all the takes that they had, which were a lot of them were like super steeped in fear, man. Like the discussions that I have with people from that end, it's always military, it's always like money laundering,
Sure.
and these are the reasons that we can't have these things. It's like, well, that seems like a very fearful take. But one of the best
Sure.
quotes that I got from it was this irony that we started from a point where there were a lot of, you know, or there weren't a lot of people that wanted this libertarian mindset of like being, you know, I guess free with your money and the ability to have that privacy, have that security, but we're also kind of seeking mass adoption, which is like the exact opposite of the foundation that it was kind of you know, founded on. So give me a little bit of that take, that discussion that you had with those guys that we're like seeking this mass adoption, because that's what NFTs are kind of involved in here too. With so.
And that's where I get a little bit concerned with fads, right? And with organizations like Celsius and Voyager and BlockFi who are just like, hey, you get all the degen yields of crypto, but none of the inconvenience. Like, there's no free lunch, guys. Like, you don't get all that stuff, without having to do the hard work of securing your funds. And same with BAYC. You buy a six-figure ape, and like you're gonna fall for just someone asking you for your seed phrase. Like, we really need to educate people on how to secure their assets, because again, the middle ground leads to these huge bank runs and busts of like multi-billion-dollar organizations who are, I want to speak plainly about this, misleading you. They're misleading people about the fact that they're crypto organizations. They're not. They're not on chain. They're not transparent. And they're not banks either. They're not regulated. They're not protected. And they pretend like they're somehow both. Oh, we're a regulated entity and we're crypto and we're anti-bank.
Best of both worlds.
And in fact, they're the worst of both worlds. They're both unregulated and exposed to the risk. And so it's like, yeah, my take here is that like mass adoption is not going to happen overnight, and we need to do it the right way. And the right way is educating people one person at a time. Get your friend to order a ledger from the website, right? Get them to set it up, get them to transfer their funds to it, link it to your MetaMask, and just like make sure that everyone is doing these things the correct way so that we don't get burned and the industry doesn't get a bad reputation as being full of scammers. Because really, the people deep on the inside building the infrastructure and the protocols, they're not. Those things work. It's the grifters sitting on the outside who are trying to sell you BS, like, oh, you can get all the degen yields, but with none of the risks. Those are the real bad guys.
Yeah, I want to talk about your journey kind of coming from your education, right? And coming from that capital S suit that we mentioned of getting potentially involved in like, venture capital, and then also, building these tech startups to actually being in DeFi now. So can you kind of give me a little bit of background on where you came from, man?
Yeah, background. I was originally a philosophy major. My joke that I repeat is that, I still ended up a management consultant. So I did a bunch of like consumer retail consulting with like just old school businesses like soda companies and like big box retailers. And then I worked in private equity, and we owned a bunch of big businesses that you might have heard of. I worked on the Weather Channel and Michaels, the arts and crafts retailer. So I was very much trained on like old world businesses. And then I actually started two old world businesses in real estate and in food tech. And I was shutting down my last startup in food tech. We had like launched it into COVID, and frankly, things just weren't going that well. And some friends were like, hey, we know you've been pretty skeptical of crypto historically because you're not really like a huge tech guy. But, there's this new thing coming around right now called decentralized finance. Like, you might be really interested in it. So I started looking at DeFi, and like, man, the amount of fraud, the amount of corruption, the amount of inefficiency in traditional finance, like anyone who's worked in that space is aware, right? It's like lots of phone calls, lots of relationships, lots of like bankers coming to your conference room and like pitching you a refinance. Like, so the idea that I could do like complex financial transactions with a click of a button and it was secured by code and not like armies of intermediaries like lawyers and bankers and consultants. And I sat on both sides of the table. I was both a service provider as a consultant, and I was on the buy side, so to speak. I was like sitting in an investment firm. So I saw on both sides how much inefficiency and waste there was. And that just totally blew my mind. And that got me into, why crypto's so cool, why Ethereum's so cool, right? It's like 100% uptime. You can totally prove that you own something by furnishing your private key or signing a transaction. It's totally permissionless. It's open 24/7. Like, the cost of doing business is remarkably low compared to, for instance, like having a lawyer draft something up for you. It's like enforceable by code. You don't have to like go to the judge and jury. Now, a lot of the critics look at this and they're like, this is awful, right? If something goes wrong or you agreed to something you didn't like you can't bring it to a judge and jury. I'm like, that's a feature to me, man. Like, I hate the legal system. Like, I hate having to go through all these like human intermediaries and like try to explain the business case to them so they can like translate it into a written legal document, which then is not even really enforceable until it's taken to a court. Like, okay, we just replaced all that process with like an engineer who writes a smart contract and it just gets enforced automatically. Like, I think that's pretty cool. And if you don't think that's cool, like, yeah, stick to the legal and court system. That's not going away anytime soon.
There's this idea in the NFT space that like eventually everything will be an NFT. And you mentioned you started a real estate startup, and real estate is this idea that
Yeah.
there's an idea in the NFT space that again real estate will be NFT, the deeds will be NFTs, the insurance will be, all of this stuff is going to
Yeah.
be NFTs. Do you partake in that theory? Is everything going to be an NFT eventually?
I don't. And, I think I maybe went a little too far on the last one where I was like, real estate will never go on chain. And, like, then I had the, Chainlink guys, like, jump into my DMs and be like, you forgot about Chainlink. And, like, I'm a Chainlink fan, okay? Aztec uses Chainlink. Like, don't, hang me for saying that oracles are an unsolved problem. But it's not the Oracle infrastructure by itself that's the problem. It's the problem is further up chain, right? Like if you think about the way real estate deeds get done, we have this social consensus that it gets done by like an assessor like walking a plot of land, and oftentimes there are these like little like brass triangles that get like pyramids that get put on the four corners of your property. Those are physical items and they get enforced. Now I know there's like some jurisdictions that are potentially moving to like lat long, and a lot of this stuff is getting digitized, but like ultimately at the end of the day a lot of this is in the real world. And so unless you have some like really decentralized network of like assessors and like title people and like mortgage brokers who are all going to report the same information and get consensus and then put that stuff through an oracle on chain, I just find it hard to believe like any of that stuff is going to land,
Hmm.
you know, on crypto anytime soon. And that's not an indictment of crypto whatsoever. I think crypto is really good at what it's good at, but the real estate system is extremely hard to move. And as someone who has started a real estate startup, like that universe, many billions of dollars of venture capital have gone into something called prop tech, property technology startups, trying to change the current way that we do things. Like, let me summarize it for you. It's not easy. There's many, many billions of dollars of builders, construction firms, lawyers, municipal governments, like many stakeholders who have a strong incentive not to change, to kind of
Yeah.
continue with the status quo.
This isn't on my dashboard at all, but just kind of like rang true for me as we were having this discussion is like your thoughts on metaverse real estate having that background, right? Like we have NFTs that represent, land in the metaverse. What are your thoughts there? Is that a great use case? I'm assuming.
I'll be honest, I think that's a more compelling use case than bringing real estate on chain. I'm not saying metaverse real estate will be a thing, but I can at least imagine how that works with crypto, right? I'm playing a game. I really liked playing Zelda Breath of the Wild, one of the best games ever made, for Nintendo Switch. And I could imagine having like a little hut in Breath of the Wild and taking out a digital mortgage and having to like, maybe I commit my golden armor as collateral for that mortgage, or the house as collateral for that mortgage, and I get something, a piece of financing that's fully on chain but is represented graphically like in this Breath of the Wild universe. And at some point I decide I want to sell my house, and there's like an auction that happens like inside this universe. Oh, okay, that's all consistent. And
Hmm.
actually I can tell you a really good story about why I want a house on the hill overlooking the kingdom of Hyrule. Because like if you've played that game, that's sick. And if you could own the rights to that view, even in a digital universe, like I actually totally would pay for that. Would I pay $1 million like I would pay for a real house? Like probably not. But like I spend non-zero amount of time in the Hyrulean kingdom, and so like yeah, I'd pay for that right. I'd pay for the ability to like have an in-game asset. So I think I would be much more likely to say that's a possible universe in crypto than someone's mortgage being traded on crypto rails.
Yeah, I've been having some conversations here on like gaming and in gaming NFTs being this like north star that we can all look at in the midst of this bear market, saying that this is going to be
Sure,
something that will eventually take hold. What are some other feature
sure.
sets or like sectors of NFTs that interest you that you think are going to do super well?
I probably don't have like super strong views outside of like the common categories, right? Like gaming assets, PFPs, and fine art, right? I think those are kind of like the three predominant assets. I will say that personally, as someone who is more of a DeFi guy at the beginning of this bull run, I was shocked at the success of PFPs. I was just blown away. I thought the NFT market was all going to be about fine art and one of ones. And the fact that it's all about these like 10K collections, like it speaks to like something about NFTs that I couldn't anticipate. That it's like not economic, right? And it's not even necessarily aesthetic, but it's about like membership, affiliation, belonging, community. And like, I haven't spent a ton of time around New York for this NFT NYC, but like just seeing some of these parties, I mean, some of them are kind of cringe, but the fact that they're cringe is evidence of how strong the communities are. The fact that you're at a goblin party and there's two like hired goblin actors, like it's pretty psycho. And I actually think like outsiders look at this and they're like, what a bunch of virgins. And I'm just like, I don't know. It's a creation of like a universe and a community and like tons of that type. Like look at sports fandom, right? If you looked in a vacuum at a Jets at Jets fans tailgating and like having their shirts off and painting their bodies green in a vacuum, if sports hadn't ever existed and you were just exposed to this, you'd be like, that's cringe as fuck, right?
Yeah. Well, it takes you gotta like incorporate the other side of this too, because my buddy just tagged me in a photo of like some crypto conference that's happening at the same time. It's just a bunch of booths and people trying to sell you stuff, which is exactly what it was like 3 years ago. Now you have all these, some of it's cringe. Amy Schumer being at 8Fest, cringe, but there's all these other dope things that are happening at the same time. Is this missing in DeFi? Like that's always like something I pointed to, just being more in the NFT space myself, is like, how do you build a community in DeFi where it feels like people are just maybe hopping from protocol to protocol based on yield? Like, is there an ability to build communities? Oh, go ahead.
There is loyalty. I think it's easy for us to forget because the war has kind of been won. But remember, like Uniswap versus SushiSwap, like there were some serious battle lines. And like, let's be super clear. In the original version, so Uniswap v2 and the first version of SushiSwap was just a Uniswap fork. Like they just literally copied the code. Like I'm sure there were some improvements and tweaks, so like I don't know if there are any sushi loyalists remaining, but like for the most part, it was just like a fork, with some yield farming incentives attached to it. But like there were diehard sushi fans and there were diehard Uni fans. And like, how do you explain that? Like the technology is basically exactly the same. Sure, the liquidity pool by pool could have been like a little bit different. There's like some small feature changes, but like it's basically the same thing. And so I actually do think there is identity in DeFi. There is affiliation in DeFi and a feeling like loyalty, right? And I think this is one of the crazy things about crypto that people outside crypto find very distasteful, which is like, if you're an owner of something, you're incrementally more loyal to it than if you weren't an owner. And that's just like a fact of life, right? If you have, show me the incentive and I'll show you the outcome. Well, the incentive is like promote it because you own a piece of it. And I personally think that's really cool. I think that personally creates all these like interesting new business models where you get to incentivize the users of the platform as if they're stakeholders and shareholders. And you get to blend those two elements together. I think that's super dope, but I can also see why people outside of crypto are like, oh, this leads to all these like perversions, people going super hard for a protocol just because they own a piece of it.
Yeah, I want to comment on the chat really quick, guys. We are sitting here on the Nifty Q Show. Catch us afterwards as well. Spotify, Apple Podcasts, all that good stuff. I'm sitting here with John Wu, head of growth at Aztec Network. I want to quickly comment on chat. Asmodai saying, I feel that's why gaming NFTs will be strong as long as gameplay is primary. You have that community, that user base. Sasa's in the house, and she commented on Twitter as well, so I definitely want to give her a shout out as she is tuning in. Guys, we just pressed live about 20 minutes ago, so really happy that you guys are here. John, I want to get back into the timeline, though.
Yeah.
Like, when did you get introduced to DeFi, and how has DeFi changed in that time? You mentioned using Uniswap being like the main piece that like was the light bulb moment for you, but did you experience then DeFi summer back in 2019? What was that experience like? Did you get wrecked there? And just your journey there.
It's funny. I actually came in after DeFi summer. So DeFi summer is 2020, and I came in early 2021. And so this was like after the original DeFi protocols had been invented. There were a bunch of new innovations like Fei protocol and protocol controlled value and I'm sure there's some OMIs on this call, but like Olympus DAO and that form of like protocol controlled value. That was also the beginning of like a bunch of on-chain derivatives like DYDX going to Starkware and Open and Ribbon and like all these new financial products like coming online. And I actually had the amazing opportunity to work for Uniswap very briefly. I was just there for like a month doing partnerships with them. And I saw how much uh, activity and ambition there was in the DeFi space. But actually, right after that, I realized that the infrastructure was still really immature, right? Like Ethereum was super expensive last summer. It was hard to get transactions. And if you recall, this was also NFT summer. This was when OpenSea volume. I was at Uniswap at the time, and I was updating a dashboard at Uniswap for like a presentation I was going to give. And it was like every hour I had to change the graph because it was just like going vertical. And that was so mind blowing to me. But I realized that everything was so expensive. There was no privacy. And so I started looking at like, okay, who's working on building the infrastructure that's going to take us to the next level? And that's how I got involved in looking at zero knowledge rollups and zero knowledge in general. And ZKs, for those who aren't familiar, it's just a way to prove something without revealing it. And so a good example is like when you go to a nightclub, you know, typically they're like, you have to be 18 to get in, show me your ID. Well, what are you doing when you furnish them the ID? You're giving them all your information, your name, your home address, your date of birth, your birth date, like all that. A zero knowledge proof is basically just a way to wrap all that into a blob of math, like just a bunch of numbers. And you hand that blob of math to the bouncer and he scans it. And then on his side, there's a proof verifier that says, all it says is just for whatever test you want to run, like, is this person 18? It just says, yep, this person's 18. So like, I don't need to know your birthday and do the math and like subtract today's date from that date. I just need to know that the piece of math you gave me is like verifiable. It for sure says that you're 18. And so that technology is really cool, and it's been used for Ethereum scaling, but we at Aztec are using it to protect user privacy. And user privacy is super important. Like, I think we've seen a bunch of these NFT hacks, right? Phishing attacks, phishing attempts, people losing their Bored Apes. Why? Because I know exactly where the Bored Ape lives. Like, I can see it on Etherscan. I'm like, you just purchased a Bored Ape. Great. I'm just going to attack you and try to take it away from you. And so being able to have privacy by default, and if you still want to flex, here's the cool thing about zero knowledge flexing, okay, that I think people don't like quite understand. You can flex your NFT without revealing your address. You can be like at a party somewhere and you can be like, hey, I own this ape. And it's like, well, okay, how do I know you're the person to own this ape? Yeah, scan this blob of math. And it's like, oh, okay, sure. You scan the blob of math and then it spits out like, yeah, this guy actually owns this ape. That's super cool, right? It's you know, it's pretty much a more advanced form of an Ethereum signature. It's a way for you to prove something without actually showing someone. And so like for NFTs, you can also have like private purchasing and private trading. You can purchase NFTs using our system, Aztec, and Aztec will buy the NFT on your behalf and give you a receipt that says like you own it. And you don't have to reveal to anyone else that you own it. Like all of these NFTs just get held in a vault. And anytime you want to claim it back out of the vault, you just hand us your receipt and you can pull it back out. But until that happens, nobody knows who you are. Nobody knows how much you paid for it. Nobody knows, you know, who the owner ultimately is. You can send it to one of your friends by just handing them the receipt. So anyway, all of these things got me very excited about privacy is going to create these new types of games, and it's going to make for a much more secure blockchain environment. And that's kind of really why I got so excited about joining.
There's a lot of people that would claim that transparency is like a feature, right? You mentioned feature, not a bug. Like transparency is in being able to go into somebody's wallet and see all this stuff. That's what we all kind of strive for, is this open environment. What would you say to people that have that argument that says everything should be out in the open?
And that's kind of the magic of zero knowledge proofs, is like actually just because it's not revealed doesn't mean it's not provable. And like this is a really hard concept to like wrap your head around, which is just like you can furnish a proof of ZK verifiability. So, you know, a lot of people are like, well, if you create a private environment, well then like lots of like nefarious things can happen. Why? The magic with the magic of ZK proofs, you can furnish a proof to a regulated authority, and you can say, here's a blob of math. Scan the blob of math, and the authority scans the blob of math, and it's like this person has not committed any crimes. And it's like I don't need to tell you what any of my on-chain activity is. I don't need to tell you anything, but everything that I'm telling you, like I paid my taxes on time, or I never transacted with a non-KYC party, or I didn't hack anyone, or all of these things can be proven without actually revealing your transaction history. And like it's worth emphasizing that this is an extremely hard concept to wrap our head around because it's just not something that we encounter very frequently in our day-to-day lives because it's such a new technology. But maybe just like one more example, because I've got like a load of these like zero knowledge proof examples. It's like, when you're at home at night and like you hear your roommate come home or whatever, you don't need to see them to know that they're home, Like I don't need to verify like by like seeing their face. Like there's other data that I can collect that tells me with like very near certainty that like my roommate is home. So that's like another form of like kind of primitive zero knowledge proof. I think that this is going to permeate almost every single thing we do over the course of the next 5, 10, 20 years. The ability to have perfect privacy at all times, but also auditability. Also be able to prove like everything I'm doing is legit. I actually own this thing. I'm not a bad guy. Like you can do both of those things at once.
Yeah, I want to get into a little bit of the actual features that Aztec has, right? So if I'm on Uniswap, does this look like I'm interacting with Uniswap while on Aztec Network, or how does that actually look for a user of what you guys are building?
Yeah, so right now we have a product called Aztec Connect, and it's essentially a VPN for Ethereum. So it allows anyone to use Ethereum services with full privacy. The same way if I VPN'd into a website, the website wouldn't know it's me. It would just say like, oh, the IP is like through some virtual proxy network. It's some server in Argentina, right? So we're basically the VPN for Ethereum layer 1. So if you did a swap on Uniswap, the Etherscan would just say Aztec private rollup interacted with Uniswap. And so who was that? Who ordered that transaction? No one knows. Like that's the magic of our encryption is we do the transaction on your behalf and then we return a receipt to you that says like, hey, here's your receipt for the action that we did on your behalf. It's almost exactly like a VPN, and that's how we protect your privacy.
Interesting. That's a really good tagline too. Do you guys use that on a daily basis? So the VPN for Ethereum, because I think that would connect with people way quicker than trying to explain the use cases. Essentially.
Yeah, for sure. We haven't quite launched that. We haven't quite talked about it like a VPN, but it is a very convenient way to talk. It's like my cocktail tagline is like, it's the VPN.
Yeah. So is Aztec based in the US? Because now I'm going to get into the cartoon avatars guys' mindset of being like, okay, you're creating something that is essentially, again, I don't want to use the term blocking. I think that might be the wrong word there. But like you're having private transactions now. What does the US government have to say? What does the SEC have to say? All this stuff. Do you guys look into that? Are you based in the US? And how do you kind of do that, building the features you're building?
Yeah, so we're a UK entity, so we're not actually in the United States, but I'm sure US regulators will have some take on it. One thing people don't realize is like at least the Biden administration is really focused on consumer privacy. So the Biden administration had a whole executive order that essentially commanded federal agencies to examine crypto. Go do your crypto research. And they mention privacy like a dozen times, consumer privacy. They're really focused on this idea that like blockchains are very privacy exposing and therefore not good for consumers, right? If you think about what the federal government is trying to do, they're trying to protect individuals. Like if I think about the federal government as a service provider and the service they're providing is like we protect you and we build roads and in exchange you pay us taxes. Well, it's really important for the tax base to like not get scammed and lose their money to like North Korea and like any of that stuff. And so privacy is really important for protecting consumers and making sure you don't lose your money to a hacker, right? Because that hacker could be literally a national security threat. I don't want to take this like super offline, but 2 months ago I interviewed a North Korean hacker, and these North Korean hackers are also like attempting like phishing attacks on individuals and like stealing funds and trying to get hired by crypto projects because they're trying to like remit funds like back to North Korea for weapons of mass destruction. So consumer privacy is important for protecting individuals. It's also important as a matter of national security. So I personally think that consumer privacy is going to be something that federal authorities look kindly on. Maybe this is like hopium on my part, but like I think there's far more to be gleaned from protecting the individual than there is to be lost from like a Mexican cartel using our system. They're just not going to do it, right? Like, and among other reasons they're not going to do it is like, you had the existing system of money laundering already works so well. Using cash in traditional banks already works so well. HSBC already laundered $1 billion for the Sinaloa drug cartel. If you can just work with a bank to do it, like, why would you have to adopt all these new crypto rails?
I don't want to bury the lead here. You said you interviewed a North Korean hacker. Do you have a podcast that you could shout out right now? I'd love to kind of like dive in. Like, we're talking about monkey JPEGs, and you're talking to North Korean hackers who are selling funds to create weapons of mass destruction. I would love to get involved in that.
I'll have to send the link. I've done a couple interviews on it, but it was a crazy story. It's worth summarizing. I mean, like, this guy applied to our company. His name was Bobby Sierra, and it's like immediate red flag. That sounds like someone put like white guy into a name generator. And yeah, just all kinds of red flags after that. Like, didn't show up on video, had a heavy Korean accent. There were a bunch of other Koreans speaking in the background.
Jesus.
And then, interestingly, after I shut that interview down, I was like, whoa, that was kind of freaky. Like, I don't know what that was, but it seemed like maybe a North Korean hacking attempt. Again, the U.S. Treasury released a 16-page report being like, watch out for North Korean IT workers pretending to be programmers who are from the West. And this guy had pretended he was like a Canadian citizen. And this 16-page report basically outlined exactly what I saw, which is like deep inconsistencies between their like GitHub and resume and all that stuff, pretending to be a foreign national when they're not showing up on camera, asking for payment, using like a router or like some an address that doesn't match up to their actual name or their home address, like, using financial intermediaries, like all the stuff that they basically said.
We have to have another interview to go into that conversation, man. I want to get us back on a track that I kind of threw us off of. I do have a question here from chat that is interesting, that goes back to another, the earlier conversation. Wasn't there a lot of gen art that was pumped by Three Arrows Capital? Is there any like fallout of that magnitude with like low liquidity in the NFT space because a lot of funds were being used to buy up art or other assets or PFPs? Is there that connection there?
That's a great question, actually, because I know 3AC had started their own NFT fund, right? They had seeded Defiance, which was Arthur Zero X's, DeFi VC. And if I'm not mistaken, they started Starry Night, I believe it was called, and that was their like prop NFT fund. I think it's only a systemic risk to those assets, like if you think 3AC is gonna like liquidate them all. But I don't know what the situation with 3AC is. Like, where's Kyle Davies? Where's Suzu? Like, they could just be on the run somewhere, right? And like, we'll just have to see, what happens and whether they'll repay the obligations. I'm not in a position to speculate on what will happen to those assets, but if they have to ultimately liquidate them to make their customers whole, or their lenders whole, or just to come up with a few extra bucks so they can like stay on the lam, like, that's not great.
Yeah, you mentioned earlier, we're all over the place in this interview, so that's apologies on my part. But you mentioned having worked at Uniswap. I think Uniswap just acquired a company for an NFT marketplace. I'm blanking on the actual acquisition.
Genies, yeah.
Okay, where do you see these NFT DeFi features merging, or like sectors merging? You have this experience being in DeFi. You obviously, own some NFTs. How can NFTs and DeFi work together, and what will we see in the coming years of that merger?
I think DeFi, DAOs, and NFTs are inextricably linked, right? Because these are kind of like you need the financial ecosystem. NFTs are essentially assets or rights to assets. And then the third thing is DAOs, which are governance and coordination mechanisms. Like, we're just rebuilding everything that we need to run an economy or run like a society, right? And so I think some of the coolest projects that came out of the last bull run, I guess we're like coming to the end of it, or it's been over. Fractional is really dope, right? Direct fractionalization of NFTs, I think, is super awesome. Being able to immediately break up an NFT into a bunch of fungible tokens, and then you can own a partial a partial quantity of an NFT, and so you can be part of a club that owns like an alien. Like that's pretty dope. I think Nouns is like an amazing example of the crossover of DeFi DAOs and NFTs. Every single day, there's an auction for a noun. It gets sold at a price. The dollars go, or the ETH goes into the treasury, and then by virtue of owning a noun, you get a vote in how that treasury gets spent. And so that's like a very explicit example of how DAOs, DeFi, and NFTs are all like tightly interlinked. Um, so, as with any asset, there's going to be financialization of NFTs, whether it's fractionalization or lending against NFT collateral, or using NFTs as badges or as voting rights, right? Like the way that Nouns does. Yeah, I think we sadly the bull market ended before some of these experiments kind of like got to their ultimate conclusion. I think these are all good starts, but I'm excited for hopefully if we get another bull run and we get another expansion, I'm excited for the next wave of innovation.
Yeah, right at the end, like you were saying, that of this bull market, we had ape token launch as well, which gave us a really cool look at like large scale DAO operations. I feel like they were immediately dealing with a lot of people that were interested in voting, where that's what you have to deal with in a DAO, is just complete apathy when it comes to getting
Yes.
involved in proposals. Do you feel that way?
For sure. I mean, in some ways, like we haven't gotten very creative about DAOs and governance. There are obviously a lot of great organizations. I have friends who are starting awesome DAO infra companies like Tally and Orca, and I think the tooling is definitely not there yet. But also, there's kind of a bit of a lack of creativity when it comes to creating DAOs. Like, there's no reason why we should have flat hierarchy for DAO. Like, I don't know how many ape coin holders there are, but let's say there's like what 10,000, 50,000, something like that. There's 10,000 apes, so let's assume. But the coins we're trading,
Well,
I don't know. Let's say there's
mutants got some, so it's a little, yeah.
so let's say there's 100,000 ape coin holders or something like that. We're gonna run a government where it's a direct democracy and 100,000 people are gonna vote on every small thing. That doesn't make any sense, right? There are already great models of governance out there. The U.S. government is an example. Some people might think the U.S. is not a functioning governance system. I would say it's worked pretty darn well for like the past couple hundred years. And there's like a segregation of responsibilities, right? You have a bicameral legislature. You have an executive branch who gets voted into power. But once they're in power, they don't have to turn over the vote to you. Like if Joe Biden wants to like create an executive order, or if he wants to send Marines to like, go take down a terrorist, like he can kind of do that within a certain amount of authority before Congress steps in and says, okay, this has to be a formal declaration of war or whatever. So you've got all these checks and balances and like a very diverse set of governance tools at your disposal. And us at DAOs, we're just like, how about everyone just vote on everything? Like, it's like there's better ways of doing it. Like, I think we can do way better. And so I'm excited to see all that creativity kind of like come to fruition next time.
Yeah, it seems like I don't, and then again, I don't know how in depth and involved you are in a lot of the NFT projects that have launched tokens as well, not just NFTs, but it seems like maybe more than half of them have fallen short. Like they're usually like building an NFT product, which is entirely different than building out the economic structures, the financial structure that you need to have a good, token, a circulating like currency maybe. Can you give me any insights on that? Like, have you seen any products or, I guess NFT projects that have done it well and maybe where they're falling short on some of these?
I mean, I am a loot holder, bag holder now. So
We all
I,
are.
I bought loot, and loot, man, that was a crazy moment in NFT history, right? Everyone was like, loot is decentralized Disney. And loot did this actually totally unaffiliated token drop called A Gold. And A Gold was airdropped to like all loot holders. And one of the big problems with loot, honestly, was that there was no core team. Dom created it and then he let it loose on the community. And that was what was so cool. Everyone was kind of building on top. But there was no one person, no visionary, no core team that was 100% dedicated. And this is kind of the funny thing, right? You can both have decentralization and centralization live side by side. You can criticize Uniswap. Some people really do because, oh, they're venture backed and they've got like, former regulators working for them and bankers working for them. But they have one of the coolest, most effective, iconic, decentralized products. And that was created by a centralized team. So centralized teams can create decentralized products, put them on chain, and then say, okay, we're going to move on and we're going to make something else that's decentralized. And so you've got these two organizations side by side. You've got a centralized Uniswap Labs entity, and then you've got this decentralized like Uniswap grants program, Uniswap DAO, right? And so I think one of the problems with Loot was like they were lacking some of the vision, urgency, and cohesion of like a centralized team. And so my hope is like we don't become maxis one way or the other. Like these old world ways of doing things, like having a CEO and like having a 6-month plan and like having an agenda for the meeting. Like some of those things work, man. Like great businesses have been built using those tools. At the same time, there's some huge benefits to decentralization. There's like censorship resistant. It's like highly democratic. Everyone can have a voice. My hope is like we stop thinking like maxis and we can build systems that kind of get the best of both worlds. Knowing, of course, that again, there's this other trap we can fall into, like Celsius did, where you get the worst of both.
Yeah, I want to get your take on like some other DAOs that are doing this well, just so I can do my own personal research. But I'm sure there's people out there that would love to hear like other DAOs that you think are doing maybe this merger of NFTs, DeFi, and just cryptocurrency in general. Yeah, I'd love to get that take, but I'd also want to get that take on Uniswap as well. Some people think that and maybe I fall in this category of thinking they went too far one way when they took VC money. They're not looking to do a token airdrop or anything like that. That it seems like like they're leaning more centralized structure with their company. Do you take that approach or take that kind of side, or how do you think about them going with the VC money and where that puts them today?
I think I struggle there because they were one of the airdrop OGs, right? The original Uni token airdrop was like fully decentralized, and it was one of the. It actually set the prototype for future token airdrops, and so like I think it's hard for me when people criticize Uniswap as super centralized because they actually paved the path for the way we do things across multiple domains. Grants program was like very unique at the time. The airdrop was very unique at the time. Yield farming, they weren't the first to do yield farming, but they had an effective yield farming program. They were pretty early to that. Yeah, decentralized governance, they were early to that. And so, yeah, I think that's where I really struggle. And it's like, I think we demonize VCs as like, oh, VCs are evil. I'm not really sure where people get that perception from.
Mm-hmm.
Maybe because like, they're investors and they want a return on their assets and like they want to make 5x or 10x on every dollar they put in. But like, so do we, right? Right? Like, so do we. So I have a hard time blaming them for taking VC. I mean, like, very transparently, Aztec has taken VC from great partners like Paradigm, and they've been nothing but helpful to us. That doesn't mean we're not dedicated to building a decentralized protocol, but I kind of question where the other capital would come from, right?
Yeah.
Because, once you start going public tokens, stuff like that, you run into the ICO problem. It like, and regulators have a big hand in distorting this market. If regulators were like, ICOs are cool again, you could totally just sell tokens on the open market. I have no doubt many of us would go down that path. But regulators were like, no, you can't do that anymore. And VCs were like, thank you very much. Now we're the sole capital providers. And so I welcome someone to come up with a better alternative. But for now, like, they're an important source of capital and guidance and technical assistance and all that.
Yeah, well, a lot of those ICO companies weren't revenue producing companies, right? Like, so when the revenue dries up and then you already launch, I think Wiren had this problem initially where they did like a full distribution, didn't save many for the team, and then Andre came out and was like, this was actually a terrible idea, even though it was championed at the time as being like this like fully decentralized, this is the way you need to do it. I forgot the term they used. I don't know if you know it, but the way they distributed those tokens. Do you have any comments on like Andre or Wi-Fi? It just kind of pinged in my brain. Everyone seems to have forgotten about him.
I actually, yeah, because he like kind of quit DeFi. I actually don't know the history of Andre and the Wi-Fi distribution.
Oh, okay. All right, well, let's get back into Aztec. We're coming up to the end of the episode. Also, guys, if you do have any questions for John before he gets out of here, definitely drop them in chat. But let's talk about like roadmaps for Aztec, what the usage looks like today, and where you guys are headed.
Yeah, so we've got almost 80,000 registered users. $50 million of cumulative volume. It was over 100 million when ETH was kind of at a reasonable price. It essentially works right now like a privacy protocol, but much cheaper than the alternative. So think Tornado Cash with arbitrary assets and full DeFi functionality and like 25 times cheaper. And so we're very excited to bring the VPN of Ethereum to the space via Aztec Connect. The long-term vision is to create our own network and our own execution environment. Again, still secured by Ethereum, but it allows you to do fully private smart contracts. And so I get to now create games with private game state. So for instance, like, depending on what type of game you like, let's say I play a shooter, right? You couldn't really build a first-person shooter on Ethereum today. Why? Because all the state by definition has to be public. And so imagine a shooter where I see you as a sniper and I see exactly how many bullets you have in your magazine. Well, like that wouldn't be a very fun game, Like if I were able to see the state of every single person's game like all the time, or cards, like a card game wouldn't be very fun if we could only play it face up. And that's the problem with Ethereum today is, we think of privacy as like consumer privacy, like, oh, I don't want anyone to see like what I'm doing on the internet, that type of privacy. But there's also privacy as a game mechanic. We forget that like most of the games we play require privacy, require like dealing the cards face down. Like we don't think of that as privacy, but it is. Like, and we don't think of that as like, oh, my privacy is being violated if the cards are face up. It's just not a fun game if we can only play the game face up. And so that's what I'm really excited for long term for what we're building is being able to do private smart contracts, private payments, private gaming, all those things I think are going to be huge innovations going forward, and excited to see what developers come up with.
That's awesome, man. I'd love to see the NFT integrations into games and things like you guys mentioned. Do you have plans to like build out any type of NFT pieces there? Like you mentioned games, but any like marketplace, or what are you guys doing in that sense?
Yeah, for sure. Aztec Connect is a community built system. And so anyone who wants to build the private NFT transfer protocol that I explained earlier, where you can buy an NFT and Aztec as a VPN purchases it for you on behalf and, holds it inside a smart contract, like anyone could really build that today. And I actually think that would be really dope. And so if you're interested in that, I strongly encourage you to reach out to me and apply for an Aztec grant. We have a grants program where any Solidity developer can get paid to build some of this functionality into our bridge and our system. So yeah, that's available now. That can totally be done.
Love it, man. Anything else you want to kind of get out to the viewers out here or people that are listening afterwards about what you guys are doing at Aztec? And then we'll just open up the discussion and kind of get out of here.
No, just follow us on Twitter. We're at Aztec Network, and my Twitter is JONWU_. That's John Woo _. So excited to continue the conversation on Twitter and elsewhere.
What is your PFP? I see the CryptoPunk with the gun. What is this PFP that you have?
So I came up with it when I was like, I can't afford like a CryptoPunk, so I'm just gonna make this in Microsoft Excel. So I just made my PFP in Excel, and the gun is actually like originally before I put the hat on it, because that's been my calling card, even though I'm not wearing it today. It was supposed to be like the Terminator, and my tagline for a long time was like going back in time to save my crypto. Come with me if you want to live, which is a famous line from Terminator 2. Yeah. It's just like one of my favorite movies, and I just find it like very, very funny. And so yeah, it was just like this like Terminator logo for a long time, and then a couple months ago I put the cowboy hat on because I've been wearing my cowboy hat around like a toddler recently.
Yeah, I saw the pictures here when I was doing a couple Google searches. I wish you wore it today. That would have been classic, man. As far as NFTs are concerned, any projects that you're looking at? I know Doodles just had like massive announcements, and that floor is flying there. But any other projects that you're looking into over the next 6 months, or that you like?
Man, I'm not gonna lie. I haven't really kept super close to like hot blue chip NFTs. So can't really make a recommendation there from my end, but my line's always open if you have alpha.
Well, how about DeFi? I went the other way. I'll throw you some alpha, but what about DeFi? What's being built in DeFi that maybe NFT people who aren't steeped in what the sector you're in should be looking out for?
I actually think DeFi innovations kind of like slowed down a little bit too. For a long time there were a bunch of like abstraction type vaults, so like protocols that were making it easier to trade options. For instance, like Ribbon being built on top of Open was like a really good example. I think some of the cool news in DeFi in the last couple of days is like DYDX moving away from Starkware, which is an Ethereum rollup, and into like a Cosmos chain. And so there's a lot of questions about like, okay, why are they doing that? Are we going to move to a universe where applications each have their own chain, whether they're on Ethereum as a rollup, which was the case with DYDX before, or on Cosmos as their own chain? I think that's been pretty cool so far. And then, of course, I'm obsessed with the world of privacy and what we're building with Aztec Connect, where I think layer twos being able to batch transactions lets you do a whole bunch of new things that you might not otherwise have been able to do before. You get to do off-chain voting. You get to split costs a bunch of different ways because you're batching transactions together. You can do something called coincidence of wants, where before settling a transaction to an exchange, you can just match people off-chain. Like if I want to buy and you want to sell, we just get matched off-chain, and we don't have to each execute an exchange order. So lots of fun stuff coming down the pipe, but I'd say, DeFi's been, as you might expect in a bear market, like a little bit slow recently.
Yeah, absolutely, man. I appreciate you hopping on today, even though we are in this like lull across the entire market. I mean, we did have NFT NYC here that kind of pumps some juice, but it definitely is a slower time for sure. So, when, in your opinion, are we coming out of this bear market? What trends are you looking for? What events are you looking for? Do the Fed rates need to pretty much like stop, before we kind of see the difference?
Yeah, I think Jerome Powell kind of controls our fate right now. The rate hikes have to stop. I think we need to not be in a global macro recession, right? If the world gets plunged in a recession, if the housing market goes off a cliff, everyone's going to be feeling really poor and not like they want to buy NFTs. And so I genuinely hope we don't go into recession. I frankly know some millennials and Gen Zs who are rooting for it. I think those people are totally crazy. Um, you know, um, I think it's like throwing out the baby with the bathwater. People who are like, I need cheaper housing prices, so let's go into recession. Like, dude, you're not gonna have a job if we go into a recession. So, I think it's very much up to the macro right now, up to the public markets, up to Jerome Powell, and for better or worse, crypto's still pretty dependent on what happens, in the real economy.
Yeah.
So we're gonna have to just see.
Yeah, so two lightning questions here. And I guess I'll just ask one by one here. When do we ever get to a point, or in like a near short-term future, where we do decouple those markets, or is it like a situation where it's just gonna always be tied to? I hate to say the word always because it almost sounds like too easy of a question, but
Well, it's almost like we've gone backwards or gone the other way. Like it used to be really decoupled. It used to be really uncorrelated, but it's almost like we're a victim of our own success because we asked every institutional asset manager to be like, "Hey, put Bitcoin in your portfolio, put ETH in your portfolio." And now you've got these like big endowments, these pensions, these asset managers, like private equity, venture capital, everyone's exposed to crypto directly or indirectly. Even the people who are like, I don't want to own the coins, but I want to own a business that interacts with the coins, like Coinbase and Voyager and like all that stuff, they're all exposed to crypto now too. So all of a sudden we've gone from like crypto is its own universe to like, oh man, crypto is just another financial asset that you hold in your portfolio. So almost by definition now, because we're so successful and so mainstream, like it's tightly coupled. It wasn't always the case, but like it's so successful, people are so aware of it now that like, I don't know, decoupling it, ripping it back out of institutional managers' hands, like I think the cat's out of the bag.
yeah, no, I agree. It almost felt like a Trojan horse. That's a great point, where we kind of like let them in. We said, hey, we want this, and then now we're completely coupled. That leads me to my second question. Are you surprised that NFT floor prices haven't like completely demolished? Like, I know we're down probably 50% on Bored Apes, maybe a little bit less actually, probably 40%, but a lot of them 60, 70%. Are you completely surprised at all that floor prices are kind of holding on some projects?
I'm not that surprised. I mean, first of all, it's obviously, an option ticket on the underlying, right? It's like because they're denominating crypto, like everything's down just as badly as crypto's down. It's just not down even more badly, right? And so it's like, yes, in ETH terms, we haven't gone down, but so that's the first thing I'd say. And the second thing is like maybe this is a little bit too like dark, but in every single cycle, it's the illiquid assets that go last. The liquid assets get sold first, and the illiquid assets get sold last. So am I surprised that NFTs have showed more strength than the liquid tokens? Like, no, I'm not surprised, because let's look at the real economy. Last time the S&P bottomed in 2009, I believe, the housing market didn't bottom until 36 months later. And so housing is this like super illiquid asset. Equities, public equities, are a really liquid asset. And part of the reason why I think some of these things haven't cratered is because like they're really hard to get in and out of, right? It's like it's a very idiosyncratic asset class. But I'm sure all of you on the call have been in an NFT dumping war, where like, you know, you have an NFT and you're just trying to get rid of it as quickly as possible, and the floor is like outracing your listing price. Like you list and the floor drops below it immediately, and then you list below that and the floor drops below that. And so like, again, I have no interest in prognosticating about where the NFT market is going to go, but if we ever get into that situation, it could really just go to zero very quickly, because the floor is just determined by the incremental seller. One person gets to determine the entire floor price. And so who knows, like maybe NFTs are just here to stay, but like we also haven't reached max economic pain yet, where people like lost their jobs and can't feed their family. And like when that happens, you're like, maybe I need to capitulate some of my apes so that I could just get food on the table or whatever.
Yeah, it is interesting to see that like price floor and the amount of apes between each price floor. Like there's the order book doesn't look anything like it looks in traditional, markets at all. Like you could literally fly up 20 ETH just within 20 apes. It's not like a super liquid market like you were saying.
Exactly.
John, this has been a great conversation, man. I definitely was testing myself a little bit. I've had a lot of just like, of course, Nifty Q Show, we're touching on NFTs, so it's really cool to see like the merging and the collaboration between both DeFi and NFTs, and I think you did a good job today, man. So I definitely appreciate you hopping on the show.
Appreciate the time. Super fun chat. Thanks for having me.
All right, guys. Thank you. This was the Nifty Q Show. We have NFT Live tomorrow. Check it out on the channel at 2 p.m. Eastern Standard. We'll be here next week as well. Thank you so much for tuning in. Later.
Thanks, y'all.